How's it going? Is my mic on? Everybody can hear me? Everybody good? All right, my name's Chris Irons. I work for a company called Geo Investing. I'm their senior business writer and one of their equity analysts. And I also have my own little name that I publish under called Quote the Raven Research. You may have seen me on Twitter, maybe not. But anyways, I'm going to talk to you in 15 minutes or less why I don't really have faith in anything having to do with the economic system at all, and why having a little bit of extra overexposure in something like gold may not be a bad idea, despite what you hear on television and from everybody else that's going to tell you it's a terrible idea. So we'll try and run through this thing real quick. Oh, this is beautiful. All right, anyways, so it's easy to be a short seller when you're a skeptic or cynic by nature. This is kind of how I found my way here. Not really from the financial world like probably most of you guys are. I started kind of, had like a journalistic angle that I wound up moving into the financial world from, but I was raised in a household with a very low bullshit tolerance. And that comes in very handy when you're trying to kind of make your way through filings and stuff like that, where people are trying to deceive you into thinking that things are better than they are. Some people choose individual companies to short, like people that you'll hear today, I'm sure, will present you ideas on, specific companies. I do this also, but also I'm an optimist. I don't really have any faith at all in our government, the Federal Reserve, or any of our central banking policy globally. So that is pretty much everything in the economic world as you know it. I don't really like any of it. So just to give you a quick example, driving policy based on spending and consumption instead of savings and underconsumption doesn't make any sense to me. I mean, maybe it's because I don't have a PhD from Yale, but not saving money and deficit spending and racking up a lot of debt and having to raise the debt ceiling, none of that really makes sense to me. So the best way to position against the entire system is to own gold, which is a store of value and has retained its value over years as the dollar has lost purchasing power. So the next slide is going to be gold versus the government. Why do I choose gold versus the government, which regulates the entire global economic system as we know it? Gold, finite supply, first used as money 3,000 years ago. Pretty good track record over time. Used to be used to back the US dollar until demand for redemptions became overwhelming. That should tell you something right there. Still held in reserve by central banks. They'll tell you, it's long-term tradition. I'll tell you it's because they know it's really the only type of money that's out there that's real money. It's a hedge against inflation, global uncertainty, instability, pretty much any kind of bad shit that can happen. Government, on the other hand, you want to trust your money with the government system and global monetary policy as we know it? This is my friend who's a mailman in Buffalo. 15 days ago, it's 36 degrees in Buffalo. The government sends him a message that says, when possible, take approved rest breaks to beat the heat. So, government operates with a little bit less efficiency, I would say. You can trust government. Both my parents worked for the government, okay? My dad was a postal officer also. My mother worked for the local library. So it's tough to kind of diss the government. But anybody that's been to a DMV, anywhere else, you understand the government doesn't really always know what it's doing. So if you don't want to put your blind faith in the government, that they're going to be able to micromanage the economy and that they understand economic policy as a whole, having a little extra exposure to something like gold is a little bit of a way to kind of short the whole system and have a little bit more protection. That's a lot of text. I can't believe I wrote all that. There's no way I'm going to read all that. So anyways, to me, shorting the system is diversified properly so that in the event of a United States-based or global economic crisis, any type of crisis, sovereign debt crisis, currency crisis, any type of major problem that you can think of, having gold is where you're going to want to be. Gold is going to appreciate in value in any type of those major catastrophic situations, which again is why central banks are holding it in reserve. So if you don't want to take it from me, take it from the Fed, who is stockpiling gold, and other central banks around the world that are stockpiling gold. Why do you guys think they're doing this? So anyways, my idea here, many people carry systemic hedges, blah, 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 blah. The Siegels and the Buffetts are going to tell you buy stocks because the stock market always goes up. Because over time, the stock market has always gone up. But what they don't realize is that when you zoom out, really the bull market in the Dow Jones, which has happened over the course of 120 years or 100 years or whatever, it's a very small portion of time. And since we decoupled the dollar from the gold standard, and we've started with this QE nonsense, we've kind of embarked on this unprecedented journey that nobody really knows how it's going to end. Everybody's going to tell you that it's okay. Everybody on CNBC, they're going to laugh at the guy that pumps gold, and Buffett is a genius, and Jeremy Siegel's a genius, because they just keep buying stocks. No matter how low they go, just keep buying them, right? But at some point, my argument is that this policy is going to hit a wall somewhere where all of a sudden, everything that their assumptions are based on, the whole theory is just going to go right out the door. And that's when you're going to want to own commodities, you're going to want to own precious metals, things like gold that there's a finite supply of. So what's my idea? You don't have to have gold dominate your portfolio, just maybe have a little bit more than usual. Is it a good time to do this? Maybe. As long as the government's in charge, any time is a good time. That's my thesis here. Just think about the last thing you dealt with involving government, the DMV. Did you have a good time the last time you were there? The VA, the post office, anybody sign up for Obamacare, the tax code? All of these things are giant fucking disasters. All of them. You guys know exactly what I'm talking about, which is why everybody just laughed. I mean, you can think about it. You understand that when you're at the DMV, everything moves horribly inefficiently, and nobody's enjoying themselves, and things are slow, and things are wretched, and things are awful. But then when it comes to investing, people are like, oh, I trust the Federal Reserve. They know what they're doing. Forget about it. So anyways, here's some more stuff. I'm not going to read all this stuff, but we're arguably at the top of a 10-year bull market in equities. The VIX is starting to wake up. Our president's a little crazy, which is cool whether you like him or you hate him. But anyways, everything in the world right now is backed by the US dollar, which is backed by what? What is the US dollar backed by? Anybody know? Nobody knows, because it's backed by nothing. You know, there's a dumpster outside that I saw an empty tuna can in when I came in here. That's what the dollar is backed by. It's backed by confidence. It's backed by nothing. And if the global economy loses their confidence in the dollar, we're going to have a big problem. And owning shares of Johnson & Johnson that you bought on a 5% correction is not going to make things better. Trust me. So your system is this insane monetary policy that's anything but free market capitalism. You guys call this a stock market. It's not a market. The government's buying bonds. Governments around the world are buying futures. They're buying equities. This is not a market. A market economy, a free market, would be if stocks went up and they went down. But anybody that knows that's looked at a chart of the Dow Jones from pick a date to now sees that the chart goes from the lower left-hand corner of the page to the upper right-hand corner, which is why Jeremy Siegel goes on TV and looks like a genius. Just buy stocks. What are you, crazy? The thing only goes up. But anyways, that's not how it's going to be forever. If you think that that's free market capitalism, and you think, if I told you that soybeans were in a free market and the price only went up, would you be like, oh yeah, that looks like a free market, or it looks like bullshit? It looks like somebody's kind of pulling the strings behind the scenes. And that's what's happening. You'll have people that'll make the argument, well, because the Fed's in charge, because they pull all the strings, you should just get long everything and just hold everything. Fine, you can do that. I have a little portfolio that's like a long-term equities portfolio, dividend stocks, the whole Buffett thing. It's beautiful, right? But I also have a lot of gold, just in case the whole thing goes ass up at some point. And again, I'm not saying put 50% of your portfolio in gold. Just have a touch. Just have a little bit more. Anyways, forget the rest of that stuff. Pay attention when the herd says you're crazy. I love this, right? Everybody on TV, every major analyst, Goldman Sachs downgrades gold all the time, usually right before they go in and buy it and upgrade it. But few people have the fortitude or the common sense to point this stuff out. Nobody wants to talk about classical economic theory. Nobody wants to talk about being long gold. It's a little bit of a boring position. You know, gold doesn't have a yield. People say it doesn't pay a dividend. It's like, fuck the dividend. When the whole thing comes crashing down, the last thing you're going to be worried about is a dividend if we have a major global economic crisis. So make your 6% annually now and enjoy it. And, you know, maybe that'll put another bottle of champagne on your yacht. But when the whole thing goes belly up, your 6% dividend is going to be worth ungats, as my mother would say. So the more people that say the timing is crazy to do this, the more that I like it. And I love this. I just emailed Peter Schiff yesterday. I'm trying to get him to come on my podcast. He's telling me he doesn't go on CNBC anymore. Why? Last time Bill Fleckenstein was on CNBC, Tim Seymour gave him a bunch of shit because he was like, oh, I'm long gold. You know, I happen to buy gold at the bottom. And Tim Seymour, who was like, you know, equities and nothing else, was giving him the business for no reason. They invite him on the show, then they start insulting him. The people that are into this type of angle, this type of view, they don't really get a lot of mainstream media time. So that's fine. That's why I'm here. I'm going to just give you a little bit. So here's some of our financial experts. Here's Ben Bernanke in 2007. At this juncture, however, the impact on the broader economy and financial markets of the problems in the subprime market likely seems to be contained. I don't know if you know how that worked out, but it didn't work out like he said. So he might as well take the PhD that he's got and throw it in the fire in the back of the room there, because he wasn't able to foresee the housing crisis. I love this one too. The Fed is currently not forecasting a recession. There's the S&P right there. Beautiful job, Ben. They will weather the storm. Fannie Mae and Freddie Mac, 2008. Jesus Christ. You couldn't have came up with a worse time to say that they will weather the storm than that point in the chart right there. So these are our experts, right? This is the government that's running the entire global economic policy. Here's a couple more great quotes in economist analyst history. Why Real Estate Will Boom, Not Bust, published 2006. December 2007, Goldman Sachs chief investment analyst said the S&P is going to hit 1675. It went to 900. Hey, close, right? Two brokerage firms upgrading Enron, like 4 minutes before the company went bankrupt. I don't need to tell you. What's the Fed's answer to these problems? Here's Ben Bernanke, 2002. This will give you a little insight into this guy's brain. We can print money at no cost. No cost. Sure, he means no cost like maybe the electricity that we use to run the printing press is a nominal amount of money. But there's certainly a cost, because the purchasing power of the dollar just gets crippled, which is why your great-grandfather tells you stories about paying for a cup of coffee for 5 cents, and right now a cup of coffee across the street is $7, okay? Somebody's paying for it somewhere. There's no such thing as no cost. You guys understand that, right? It's like when people tell you there's no risk. Buy this stock, there's no risk. Might be very close to no risk, but there's never no risk at all. So everybody loves QE. It works. We have problems. We print a bunch of money. Everybody's happy. The Fed's going to unwind their balance sheet now, right? I can't wait to see how that works out. But the thing is, QE hasn't really worked until we can prove that the Fed can unwind all of this shit that they've already done, and we can still be better off in a better position than we are now. Anybody can go and just print money and hand it out. Anybody can encourage you to take on more debt and spend from a position of being in a deficit. That's easy. I can do that. I can go out and take out a new credit card today with a $20,000 limit, and I could be driving around in a new Kia before the end of the day. That's like the super easy part. The tough part is like when I get the fucking credit card bill and they're like, we need $19,000. I'm like, well, I don't know where the hell I'm going to come up with that. So the Fed's in the same position. Right? This hasn't worked until they can actually unwind all of this nonsense that they've done. But why does QE keep happening over and over? I have a theory. I want you guys to hear it. Ready? Herd mentality and fear of being wrong. George Patton, if everybody's thinking alike, then somebody isn't thinking. A bad conscience is easier to cope with than a bad reputation. Well, what does that mean? Nobody wants to be the person that's saying all the stuff that I'm saying, which is why I'm not on CNBC every day. I'm not on Bloomberg every day. I have this crazy little Twitter account with some followers that follow me. They all wear tinfoil hats, and we all talk in secret about it. Like, hey, man, we know the real truth. You know what I mean? Nobody's really talking about this stuff out in the open. Here's another great quote in analyst history. By the way, I just want to say I did this before Tesla's earnings call yesterday, which, by the way, went great. I don't know if you guys heard. Nailed it. Here's some more great quotes in analyst history. So here's your financial professionals, okay? These are the same guys that are running the Federal Reserve, the same economists, the same analysts. They're all coming out of the same colleges with the same PhDs, the same degrees in economics. All right, so here's Adam Jonas from Morgan Stanley, who, to his credit, actually did put out a bit of a skeptical note this morning. And here's his 2018 adjusted EPS estimates for Tesla from 2016 to last month, and his price targets from 2016 to last month. And now, as you can see, there's a bit of a delta here in the EPS estimates, which have gone from $2.05 to the good to $6.81 in the negative. Price target, who cares? We'll just jack that up 10%. Folks, these people are not going to save you. I'm telling you that. I may sound like a madman. I may sound like I'm ranting. I know it's crazy. I have tattoos. I used to be a bartender. I'm not really a finance guy, whatever. But I'm telling you, at some point, these people are not going to have the answer. And you can't trust these people to do your work for you. Who do I trust? Nas. That's who I trust. You know why? Because Nas says, trust your own judgment, live with it, and love it. Maybe I'm wrong and none of this stuff happens in my lifetime, but I don't really care. I'm going to go down fighting for it, and that'll be all right. Instead, economists ignore Nas for some reason and are buying each other's bullshit. The asterisk there is an I. I don't know if you guys I didn't want to put it in there. I feel like we've gotten to know each other here so I can actually say it. Sorry, Whitney, wherever you are. I'm entirely sympathetic to the efforts of the Fed. This is Paul Krugman, economist, right? Nobel Prize winner, 10 times as smart as I'll ever be, but whatever, I'm going to talk some shit. I'm entirely sympathetic to the efforts of the Fed. This is a very hard time, but you should know that I'm biased. Because before he was promoted, Ben Bernanke was the chairman of the Princeton Economics Department where he worked. These guys, they all think the same because they're all coming out of the same institutions. They're all friends. It's like me and you getting together, telling each other we're right every day for the last 10 years. We're actually going to start to think that we're right. Instead of just being you and me, it's everybody in the entire financial industry except for you and me. So what happens when we have this confirmation bias? You have economists that all think the same. You have everybody that winds up trusting the system without ever looking at it critically, which is a terrible idea. Nobody talks about or pays attention to the fact that our monetary policy really seems to be kind of insane. Whistleblowers go ignored. Harry Markopoulos called out Bernard Madoff. Nobody cared. He came out and said the guy's running a huge Ponzi scheme. Everybody was like, yeah, this guy's crazy. Turns out, I don't know if you guys know, he was running a huge Ponzi scheme. So look, maybe the government will catch on at some point. $65 billion fraud, $60 billion fraud, $11 billion fraud, $15 billion that our company, GeoInvesting, has helped uncover in Chinese reverse mergers. $9 billion, Theranos just went ass up like a month ago. Nobody saw that coming, right? How can you create a $9 billion fraud? Nobody saw these things. So my idea, go long gold to short the system. Here's your no cost right here. This is the purchasing power of the dollar going all the way down here. If this was a stock, you would not want to be invested in it. I don't need to get into the details of purchasing power of the dollar. But at the same time, gold has appreciated in value. Why? Very simply because it's a store of value. It has thousands of years of value as an economic instrument. Economists downplay gold, but it's held in reserve. Why? You have to ask the central banks. They're holding it at the same time they're telling you, don't worry about it. You don't need to own gold, just own stocks. It's nonsense. They hold it to manage risk, to promote stability, to hedge against everything and the system. Why not do the same? Why not just have a little bit more in your portfolio? Here is my Alex Jones meter on how you might want to own gold, right? You can have exposure to bullion, which is the best way to do it. That means like actually get crazy and wear a tinfoil hat and actually hold gold. You can buy things like gold miner stocks, which are a little bit riskier because you actually have to deal with management teams in between you and the equity and then the team and then the commodity. They move with the price of gold, but it's not owning gold. Gold ETFs, gold futures, all the way to physical bullion. And if you look at the Alex Jones conspiracy meter, we're full on conspiracy at this point, and that's where I am, and that's where I hope to bring you guys with me. All right, we're almost done. I know I'm over my time, I swear to God. So, to talk about Whitney's thesis here for the presentation, what's the pain of short selling? The pain is when you speak up against the herd, everybody's going to tell you that you're wrong about everything, all the time. I didn't write that last part on there, but it's going to happen all the time. You're often viewed as the bad guy by people who don't understand what you're talking about, or people who are charged with just coming up with hot takes like the financial media. Sorry if you're in the room. You have to get the facts, timing, and the psychology of short selling correct. So you can't just say this is a fraud, Theranos is a fraud, it's going to zero, because if you say that at the first round of financing and it goes from a $100 million company to a $9 billion company, your ass is going to get smoked. You're going to get carried out on the trade. So you have to have the timing and the psychology right. This is something that we focus at a lot at the company that I work for, GeoInvesting. We focus on the psychology, not just the thesis. Me personally, I've gone ass up on all three of these trades. I got all of them wrong because I had the thesis right, but I had the timing and the psychology of the market wrong. Whitney, I swear I'm almost done. The pain of short selling. What's the pain? The pain is companies don't really like you when you're critical about them. They send ex-Mossad Israeli intelligence agents to come seduce you at a hotel and tell you that they want to hire you for a job when really they're just trying to figure out what you know about a company. This dumbass tried to get Carson Block to sit with him and convince him he was a Wall Street Journal reporter. Of course, Carson walked in with his cell phone and got the whole thing on video and called the guy out on video. It's a great Wall Street Journal article. You should watch it. It doesn't make companies very happy. So you have to deal with lawsuits, which I'm dealing with right now, and basically espionage and spies. It's kind of fun. So the art of short selling. You must trust your own research and instincts. Your research must be 100% error-proof because you will get sued, rather. You must be ready for psychological twists and turns. It will screw with your head. You must have the fortitude to swim against the current. Like Mark Kohota says, you kind of have to have a genetic defect. And the next time a short seller or a skeptic speaks like the people at this conference, you don't have to agree with them. They might be talking critically about a company that you're long, but at least listen to what the hell they're saying. At least just try and take it to heart. Be objective. And at least just try and consider their points of view. Because you have these guys that have uncovered fraud, and guys like Peter Schiff, who thinks a little bit outside the norm, but he predicted the housing collapse. This guy can't even get on CNBC. He predicted the goddamn housing crisis. They won't even let him on the air. So I don't know what that tells you. But apparently, thank you guys very much for having me. I'm Kase Learning.